that. I must say, and apologies to my new best friends from the UK, I must congratulate Australia on that, keeping the Ashes. That was the most fascinating test series I've ever seen. Well done. And they're currently busy humiliating our cricketers back home, so you guys are doing a pretty good job. Okay, let's move this on. I'm not here to talk about sport. There we go. So I'm here to talk about what we've been doing since I last came to chat with you, and maybe a little bit about what we're going to be doing till I come back and talk with you again in a year's time. To orient you once more, our rights are start about sort of 200 kilometers or so southeast of Johannesburg. There's the metropolis of Joburg. Somewhere down here is Durban. And we've got Secunda, where Sasol has its power plant, Synfuels plant right there. The industrial centre of Newcastle right there. Our rights consist of, our current existing exploration rights consist of 272, 271 and 270 in this kind of ragged loose horseshoe around here in the Newcastle area. We have exploration rights, Here we're converting exploration rights into production rights, and we're under a reapplication of this right reaching into the Free State called 320. It's kind of pertinent to note that we're just a few miles away from an existing helium processing facility in the Free State, run by our friends at Dwenagen. And the first place I want to put core holes in the ground, obviously, are here. If we can add helium to our portfolio, that would be wonderful. A new aspect to our business. So we kind of plonked right in the middle of the infrastructure of the country, the energy center of the country. If there was any place you could want to actually go and put gas in South Africa, you'd want to put it right here. We've got coal mines, I beg its pardon. We have coal mines around us. We have power stations, Majuba right here, Tutuka right here, and others. All of these big yellow lines here are major grids with capacity, by the way. Coming out of the North Cape where the renewables are, it's completely choked up. You can't put another panel in there, you can't transport the power. And road and rail and this Lily pipeline is of huge importance. This gas pipeline feeds from the Sasol plant up here. They receive everything down the Romco line from Mozambique and comes down this Lily line to off-takers from Newcastle all the way down to Richards Bay and Durban in KwaZulu-Natal. These guys are facing a bit of a gas cliff. The fields in Mozambique are drying up while they're going to be depleting over in a couple of years' time, and they're facing an existential issue. I might refer to that a little bit later. But if you've fallen asleep, now would be a very good time to wake up and rejoin us, because look at this. Our Sproul report that we got within the last month or so has given us a report, a resource, a 2C of 6 TCF. Given the new rules, the new PRMS rules, which I'm sure you're all familiar with, they couldn't give us a contingency outside of where we've got holes in the ground, see? So everything within our rights areas outside of where we've already drilled wells or boreholes, they've had to call that prospective. We understand that. We've got almost another 6 in prospective right there, which we will slowly convert into contingent just by putting holes in the ground. They did a maiden reserve report for us based on a pinprick. If that little light is too big, if I could hold it steady enough, the little light would be too big. About 0.18% of our geography is covered in that reserve report. It's to do a pilot production plan, and we're going to put about 30 wells in the ground, driving about 15,000 tons per annum of LNG. This is all very exciting. Tell you a bit about this opportunity a little more. I hope you had a good look at the map, because there's a quiz coming. Not really. And beg your pardon. The land holding is more than 6,000 square kilometers if we include the area under reapplication. The gas is also very high quality, like we heard just now from another gentleman, up to about 98% methane, a little bit of nitrogen. We've got no nasties. We've got no sulfur, H2S, not even CO2 in this gas, no traces. It's almost pure methane with a little bit of nitrogen. Very little or no scrubbing required or polishing. It's conventional. It's not unconventional CBM. It is conventional shallow sandstones that we get our gas from within that matrix. Therefore, no fracking required, no plans for that whatsoever, no horizontal. We may do some slant drilling at some stage. We have a 100% success rate. 41 holes have cut gas, all of them. 100%. I'm ready to call it a world record unless somebody can correct me. It's a fantastic success rate that we've got going on. The development will be based on kind of building up of clusters of 10 wells, each producing to a 5,000 KTPA LNG train, building up to groups of about 100 wells or so, providing 60,000 KTPA chains, or 50 megawatt equivalent. The development, what we've announced very recently as well, is a relationship that we formed with the IDC, that's the Industrial Development Corporation of South Africa, basically the government's investment arm. So this is a great manifestation of their confidence, if you like, in our project. They are going to partner us for a very, very long term. We're talking about multi-decade eventually. And if you look up there, the initial plan is to go, stage one will give us this 100 well, sort of 50 megawatt equivalent production opportunity, and then we multiply that by 10 times up to 500, and eventually for a 20-year long-term production plan, maybe 1.5 gigawatt equivalent in the area of 271, if you remember the map, so the southern half of that block. Stage one will cost about 1.67 billion rand, South African rand divided by 12, you can do it yourself for Aussie dollars. It's broken about 2/3 into equity, 1/3 into debt, and on the equity side, we're taking 70%, IDC takes 30%. But because of a deal that we've struck with them, they've been very kind with a premium in consideration of money spent in country to date. Their 30% is going to cost them 60% of the cost, and our 70% equity is going to cost us 40% of the cost. So that makes it very much easier for us to do. Why are we doing this? Well, we've got what's called load shedding at home, planned rolling blackouts, multiple times a day for multiple hours at a time. You just don't have power. I think it's quite novel coming to Perth and being able to charge my phone whenever I like. It's a serious problem. We just don't have enough power. I think Standard Bank worked out we're short of about 13 gigawatts in South Africa. So we need all the energy we can get our hands on. The coal fleet, which we rely on for about 85% of our coal, is aging. They've not been doing maintenance, and the government is pushing to clean up its act, because although Africa itself is only about 3% of world emissions, and South Africa is 2 of those 3, they've been pushed quite hard to clean up their act. Eskom burns a lot of coal, Sasol burns a lot of coal to liquids, to make liquid fuels. One more point, I have registered our project at the President's office. They've got what's called the SIP, Strategic Infrastructural Projects Commission, and they use the power of the President's office to reach into government departments and chivvy along our permitting and our applications when they go through the, for example, minerals and energy or water or environmental departments. So it's an expediting process, and hopefully that will cut some time off our production right application. The gas cliff I mentioned earlier that everybody's facing in the country, because Sasol provides 100% of the gas in South Africa. Well, here we are today, right? These are the fields in Mozambique, onshore. Peaked at about 2017, held their own. Here we are today, and look at this cliff we're facing. There's nothing really they can do about it. They are frantically drilling more holes. They're probably drilling an equal amount of dry holes versus gassy holes. And they may sustain it for a bit, but we're facing an existential problem for our thermal industries in South Africa. And most of those down the Lily line, well, a lot of them are, of course, talking to us, because that line comes through all 3 of our rights areas right now. As I said earlier, our 2C has been pegged at 6, our perspective at another 5.8. And this is just a comparison slide. It's one of the largest onshore gas contingents 2Cs in the world, and if you compare it alongside the quality of our gas, the size of our geography, and the immediate market that we have, it's got to be up in probably the top 5 percentile on the planet in terms of onshore gas opportunities. Very brief look here at our capital structure. I won't spend too much time here. Post-merger, we've been in the process of merging with our partners in South Africa. That is all but complete. We're right at the finish line. All the regulation is in place. Ministerial approval, Reserve Bank, Revenue Services, the shareholders on both sides, full approval. And we have just recently, literally in the last week or two, I think we've just recently announced the fact that we've now got the funding in order to fund this merger of the two companies into KKO. KKO, Kinetiko, becomes the 100% owner of the rights holder in South Africa, which is Afro Energy. Post-merger, we'll hold 1.3 billion shares, market cap of about $160 million. And I'm well funded. We are working debt-free, it's important to note. I'm well funded for the rest of my exploration program. This is also an important bit. BEE in South Africa, Black Economic Empowerment. We need a minimum of 26% to drive our production rights application. We are oversubscribed for that. We've had a lot of interest in the recent year and weeks from local investors in South Africa, good, solid investors that we're very happy to have on board. And so as I said, I'm well funded. I'm going to be able to complete our exploration program out in blocks 270 and 272. We're done in 271. There's no reason to put another exploration hole in the ground there. But we will be doing some appraisal work there. So let me just briefly tell you what we're going to do this year and then on to next. The completion of this acquisition, as I said, is just a formality. We just have to issue the shares now. So in the next week or two, you're going to find that complete. We're going to begin drilling 5 appraisal wells. If you remember the map, I told you there'd be a quiz right down near Forks Wrist at the bottom of 271. We've got 5 approved areas to go, well sites, I beg your pardon, to go and put appraisal wells in the ground. These are going to inform the wider projects of that southern block area, block 271. We're going to put 5 holes in the ground. We're going to look for sweet spots around which to design production projects. And we're going to be doing extended well testing on at least one of them. Instead of flow testing for 3 or 4 days, maybe 3 or 4 months. So we can understand the plateau. We can use the microdata to extrapolate to a depletion curve. And this, of course, feeds more accurately into the economic model. The term sheet that we've announced with the IDC is busy evolving into comprehensive agreements. We're going to test the gas to power concept in our field, and that'll drive, with our well gas, we'll drive a little 1 megawatt plant that we're going to put in the field in about 2 months' time, and we'll measure the output and be able to show you, look what our gas can do, right? It's a show-off exercise. It's something we've promised the shareholders for a while, and it's something we're going to do right now. The application for the production right is underway in 271. That's busy being built, and we carry on with our exploration in blocks 270 in the south, where the rig is right now. It just finished its 41st borehole. It's moving today to a site literally about 2 or 3 kilometers away from that lily line, where we're going to do another strategic borehole and prove gas once more. So hopefully it'll be 42 out of 42. Going forward to next year, if you like some detail on that, obviously you can come and get a copy of this from our booth outside. I invite you to come and have a chat with us. But the first half of next year, we're going to drill an additional 5 wells in the Korhan cluster that I spoke about last year. So we'll have 10 there, basically ready to already drive one of those 5,000 KTPA chains as we get our production right. The rights will be granted by about the middle of next year or so, maybe early Q3. The planning for the 50 megawatt equivalent field will be in place. We'll have the exploration right granted again for our 320. And looking at gas and helium in that specific block. And as I said, we're going to do extended flow rates. So next half of next year is going to be very busy, increasing the rig count to about 10 and moving on into our production era. I'm going to stop it there. Thank you very much. Good.